we have been suffering from deflation for more than 2 decades. And now the Japanese companies' performance is very good. There are a lot of good changes are happening in Japan. We have been observing that the number of shareholders' proposals are increasing at the general shareholders meeting. I believe that it will stimulate the discussions between management and the investors. That's the reason why a lot of investors are watching Japanese stock market as a very good opportunity.
Japanese stocks have gone from boring to booming. They're up more than $1 trillion in market value since spring 2023 and are increasingly attracting more foreign investors. Many credit that turnaround to my guest, Hiromi Yamaji, the CEO of the Japan Exchange Group, which operates the Tokyo Stock Exchange. He's become a public cheerleader for the exchange, and he's excoriated companies for not focusing on their stock values. Mr. Yamaji, welcome to the show. I want to begin with a general question before we get into the specifics, and that is, what has ailed Japanese stocks for so long?
Well, I think, so many things are happening all together at the same time. I think, Japanese economy is getting out of deflation. Say, for example, we have been suffering from deflation for more than 2 decades. And now the Japanese companies' performance is very good. I think they have 3 consecutive years. They had a record high profit. At the same time, corporate governance reform we have been promoting for more than decades is now changing the mindset of the Japanese management of the corporates. I think all of this has been happening, and we also adapt some sort of a momentum to those kind of movement through the request which we made at the end of March last year, 2023, which is a request for the management to be more conscious of cost of capital and share price. All of those kind of things stimulated a lot of the Japanese corporates' mindset to seek for more growth. And also from the viewpoint of the investors, including global investors, I think they has been passing by Japan for more than 10 years. So once they come back to watch Japanese progress, I think they noticed that there are a lot of good changes are happening in Japan, like the number of independent board members of the Japanese corporates are increasing quite rapidly. And also, I think Japanese companies' willingness to talk to the investors are totally different from what we had in say 10 years. So all of those kind of things, happening together. That's the reason why a lot of investors are watching Japanese stock market as a very good opportunity.
All right, for our viewers, let's touch on the recent history involving Japanese stocks. Japanese companies have been long been well regarded by investors, but the real excitement in recent years has been elsewhere, such as China and the U.S. That has changed in recent months. A weakened yen, improving inflation, and an investor drawback from China have all benefited Japan. Then there's the new CEO, of course, Mr. Yamaji. After taking over on April 1st, 2023, he's encouraged listed companies themselves to do more, which he just alluded to, including looking at their share price and listening more to their investors. Mr. Yamaji, can you explain to our viewers who may not be as familiar with how markets work why shareholder value is so important in your world?
I think, the companies are listed just because they are seeking for growth. And the growth means that not only the profit in the income statement, but also, I think, increase of their corporate value. I think, in order to focus on the corporate value, they need to have a good understanding of their cost of equity, because cost of equity or cost of capital is a kind of, that's kind of the lowest hurdle from the viewpoint of the investors to clear. So, but in the past, Japanese corporate world, they didn't focus on too much of the cost of capital or cost of equity kind of things, just because I think their Japanese management was more focus on income statement side, like growth of sales or market share, those kind of things. So we'd like to align the perspective of Japanese management of the companies and the investors. So that's the reason why we made a request for the management to be conscious of more conscious of a cost of equity and share price the end of March last year.
Why is it that companies list in the first place if they're not interested in creating and maintaining shareholder value over the long term? Is it more of a prestige factor?
I think, to make a long story short, in the Japanese Company Act, it's a very basic law, as you know. There is a clear one clause. It clearly mentions that the request of the care, duty of care of the corporates or the management of the corporates is towards the company itself, not the shareholders. So that's the reason why a lot of people are saying that Japanese multi-stakeholder capitalism. But I think logical conclusion is that the companies, the highest decision-making body is shareholders meeting, and the shareholders meeting can decide who is going to be the board members of the company. Board members would run the company itself. So that means that duty of care towards the company itself is duty of care to the shareholders. But in Japan, because of this sentence, the management of Japanese companies tend to think that not only shareholders but also other stakeholders are very important. Other stakeholders means that the employees or suppliers or clients. So the shareholders are one of the important stakeholders. But this notion is changing in Japan now. In order to seek for the growth of the company, the investors are always encouraging the company's management to grow in the future. So they are on their side to support their effort to grow. So I think the notion of the Japanese management is also changing. That's another reason why I think we see a rapid the change among the mindset of management of the Japanese companies.
Right. I want to talk about those changes in a moment, but I first want to ask, has there traditionally been a tendency then amongst listed companies to hoard cash instead of, say, returning it to shareholders or instead of buying back their shares, which would also increase the share price? Is that what you've seen traditionally?
I think that's right. Especially as in the past 10 to 15 years or so, Japanese companies experienced two major crises. One was the global financial crisis back in 2007 or 2008, and also another one was COVID-19 around 2019. And another is quite unique to the Japanese economy is that we were under the deep deflation on top of those two crises. So in other words, as you know, that under the deflationary economy, you can't expect the increase of your product price. That means you can't increase the wages of your employees. So in order to protect the company or in order to protect the employees as well, the management of the Japanese companies would like to pile up cash. That's the reason why I think, at this moment, average net equity ratio of the Japanese companies is 43%, which is higher than the US. US is 36% US companies, and the European companies are 39%. So, yes, European companies and also US companies, American companies also experienced those two crises at the same time as the Japanese companies, but only in Japan we're in a deep deflation. So I think the Japanese management tend to protect the company in keeping their cash in their hand.
You've criticized companies with a low price-to-book ratio. And if I have this correct, that's a measure of the market value of a company, essentially, against the value of all the actual assets against liabilities in its books. Maybe you can explain to our viewers briefly, what did the PBRs, the price-to-book ratio in Japan, tell you?
Well, actually, the request which we made, or I didn't criticize the Japanese companies about their low PBR. What we said is that PBR is one of the indicators. It's a very interesting indicator, just because you can get PBR through ROE times PER. So each company has their own unique reasons why their PBR is low. So if Japanese average of ROE is around 9%, and the Japanese average of the PER is around 15 times, that means that if your company's ROE and PER is on the average, your PBR should be more than 1. So if your PBR is below 1, probably, I don't know, ROE may be low or PER may be low, but the company can make their own analysis. What's wrong with them? And by the way, PBR 1 is not good enough at all. It's equals book value. So if your PBR is more than 1, say that 1.5, why don't you try to get 2 or 3? That's our intention.
And we should say
if your PBR is
in many other
0.5,
developed, in most, we should just add here, I apologize, we should add here that in many other societies, including the US, I would assume the UK as well, PBRs tend to be a bit higher. Is that fair to say?
That's true. And so I think, there are a number of reasons, or as I said to you, that, there are unique reasons on each company why their PBR is low. So it's impossible for the exchange to, make an instruction, why don't you do this, why don't you do this? Each company has to analyze their current situation first, and then they have to formulate the plan, how to improve it. So that's the reason why we made a request on the end of March last year. So we asked them to analyze and formulate the plan.
That's right. And so you sent out this request for companies to diagnose themselves, their own cost of capital and their involvement with shareholders. And you write here, one of the documents from your website, that TSE, the stock exchange, expects companies to push forward with management that is conscious of cost of capital and stock price based on this plan, as well as proactively engage in dialogue with investors. You ask all listed companies to return this assessment, to explain what they're doing. Some have called this naming and shaming. Some have applauded it, and companies have slowly responded. Why? Let me ask, how did companies greet this request?
I think, this request is not mandatory. There's no penalty, even if you don't follow it, okay? But 78% of the prime listed companies have already responded to our request. In other words, they made an analysis of their own current situation and then formulate a plan how to improve it. So I think, in Japan, like corporate governance reform we have been promoting in the past 10 years. And also it is not mandatory. It is a principle-based, comply or explain. But in the Japanese culture, I think peer pressure and also nudge can work very well. Say, for example, that the banking industry, the Japanese banks who list their shares on the prime market, 100% of banks have already responded. And as you may know, the banks are very, very cautious about what their peer doing. So I think a lot of Japanese companies are following our request just because their voluntarily would like to improve their capital efficiency. That's the reason why. And I think that works very well. Peer pressure works very well.
And when you look at these reports, what have you learned? Have you learned anything that's surprising?
Yes, I think number of companies have their own reasons, and they made an analysis about their reasons why their capital efficiency is not good enough, and then a lot of them made a plan to improve them through like selling some of the unproduct assets like cross shareholdings among themselves. And I think that's a very good, very good tendency that, very good direction we see. But at the same time, as you know, implementation is always a challenge. So we will follow what's happening in the marketplace from now on as well.
We know that Japanese companies have a positive reputation overseas, but as we said, they're often not investor darlings. Why is it important to increase foreign investment in your stock exchange?
Well, I think, we are the open market for everybody. We open for everybody, not only domestic investors, but also foreign investors, and also global investors, like, from US or from Europe or from Asia. They can bring also the global practice or information about a global practice or information about a global standard. I think it will give a very good insight for the Japanese companies. How do they improve their operations? I think those, implications from the, dialogue with the investors are very important, and especially for those dialogue with the global investors are very, very good, stimulating from the viewpoint of the Japanese companies, I believe. So that's the reason why we have been promoting the IRs among those global investors as well about the Japanese current situation.
What is the biggest impediment to increasing that share of foreign investment? Is it language most times? Is it corporate culture, differences in corporate culture, expectations? What do you find?
I think the biggest impediment at this moment is that language, because from the viewpoint of the Japanese listed companies, producing English disclosure documents always is the cost attached. So in other words, when we did a market restructuring back in April 2022, we made a new market segments, prime, standard, and the growth. And for those companies who would like to list their shares on the prime market, we requested that, we said that the concept of this prime market is that for those companies who are willing to engage with the global investors. So I think, we are now gradually tightening up the request, our listing criteria for the prime listed companies, because they chose to be listed on the prime by themselves through the board resolution. So we have already announced that for those companies who list their shares on the prime, that the English disclosure simultaneously with the Japanese disclosure is mandatory from April next year.
You're focused on increasing shareholder value. That has a downside as well, which many Western countries have analyzed and looked at, and probably countries around the world as well. And that includes the pressure to produce quarterly results, for example, the pressure to answer all shareholder needs. Shareholder board meetings, as you mentioned, shareholder general meetings can turn into circuses sometimes. That's been a criticism, for example, from Jamie Dimon, the CEO of JP Morgan, in his annual letter to shareholders this year. He said that there are too many hijackings of these meetings, that they're becoming performative. You're going to, by increasing shareholder value, you're probably going to increase the surface area for more of these shareholder groups to come in and steer. And there's a positive and a negative side to that. How do you assess that? What is too far? What are the downsides of this sort of laser focus on shareholder value?
Yeah. As of today, that we have been observing that the number of shareholders' proposals are increasing at the general shareholders meeting, and last year we have about 70 companies, 89 companies had around 330 shareholders' proposals, and this year about 91 companies received 340 shareholders' proposals. And some of them, have been pushing the company to increase their, dividend kind of things. But, very few, like one or two, just, passed at the shareholders resolution. So I think it is always a number of activists, so-called activists, engagement funds activities enhanced in Japan. The number of they are very, very active investors are there, but at the same time I believe that it will stimulate the discussions between management and the investors. I think if those shareholders' proposals are good enough from the viewpoint of other shareholders, then they should get more support from other shareholders as well. As of today, I think they are not so destructive at this moment. I think still there are constructive dialogue between the investors and the company, and also Japanese companies, Japanese shareholders are also becoming more active voters at the shareholders meeting. And I think that's also another very good wake-up call for the management of the Japanese companies as well. I think, number of Japanese companies have already announced the voting criteria at the shareholders meeting, and then some of them are quite, challenging. So I think those tendencies will help Japanese companies or Japanese management to learn about the shareholders' perspective.
Does the risk of something like a leveraged buyout of more companies, does that also increase with a focus on shareholder value and the likelihood that private equity may take more interest in these companies? That's, of course, a trend that we've seen in the U.S. and elsewhere in recent decades. That's also been accompanied by a lot of criticism. How do you see that?
Yes, I think number of delisting in the Japanese market is increasing. Like the last 3 years, there were 221 delistings compared to the previous 3 years. It was 157. So in other words, 40% increase of the delisting through corporate actions, including acquired by the private equity or acquired by other companies or management buyouts. I think, however, at the same time, we have a very active IPO market as well. Number of IPOs we have a year is more than 100. So, delisting is average is around 70. So the number of listed companies is gradually increasing still in Japan. And I think private equity houses, including Europeans and also Americans like KKR, Carlyle, they are quite active in Japan, and their main target is not the listed company itself, but also the kind of the divisions of the listed companies, which are not core business of listed companies. And I think as of today, not many private equity acquisition of a listed company itself have happened yet. So we will see. I mean, in the future, maybe more transactions in private equity field. But we welcome those kind of movements because I think it will give a discipline to the Japanese companies unless they realize the intrinsic value. I think they may be a target of those acquisitions.
So you would say, as head of a major stock exchange, that the public corporation, the modern public corporation, is still very modern. There's been debate here for decades about whether the public corporation really is the most modern expression of raising capital for many firms.
Mm-hmm. I think as a the primary function of the stock exchange is that to provide a risk capital for the management for the companies and also provide investment opportunities for the investors. And we are platform provider, and we are willing to provide those kind of functions for those both companies and also investors.
All right, that's Hiromi Yamaji, President and CEO of the Japan Exchange Group, which operates the Tokyo Stock Exchange. Mr. Yamaji, thank you for your time.
Thank you very much.